everybody, and happy Friday to you. Thank you so much for tuning in wherever you're joining us. As you know, we are going live to you here on Facebook, LinkedIn, Twitter, Twitch, and YouTube. So thank you so much for making the time. I hope that you're having a good week. Well, certainly a very interesting day indeed. You know, our thoughts and prayers are with the president. As you know, President Trump has been tested positive for the coronavirus. And, you know, this actually occurred last night. I was watching the news very carefully, and the market futures actually were down quite a bit. But let's talk about how the financial markets closed today. The Dow closed down 134 points. The NASDAQ closed down 251 points. As we saw Apple, Amazon, Microsoft, and Facebook continue to show weakness today. Certainly the markets weren't sure how to make the information of the president testing positive, what that really means for the financial markets. I will tell you, there's been a lot of eyes continue to be on this next round of stimulus funding. We're going to talk more about that later today, but that is certainly the news that we're hearing. Also, there was a new report talking about how 860,000 women dropped out of the labor force here in September. So certainly not information that we want to hear as we continue to see more struggles in unemployment data. And it's becoming more concerning. In fact, if you took a look at the news on CNBC, as well as some of the other outlets, you'll see that there continues to be concern about unemployment and what that means to not only people and Americans in the travel industry, but all other industries, as well as we continue to see small businesses suffer and need additional funding. So the stimulus funding, hopefully sooner rather than later. Let me tell you what we know so far. And this is some good news, I think, that you'll like to hear. First off, the GOP, the Republicans, and the Democrats seem to be very close to deciding and agreeing on the amount of funding that should be earmarked for testing in this next round of stimulus. In fact, House Speaker Nancy Pelosi has said that she does feel very confident that we will have news on another deal by this weekend. In fact, her words were exactly, "We will find a middle ground. We will get the job done." Those were her words. That's what Nancy Pelosi has told us. So hopefully we'll get that done sooner rather than later. Additionally, both parties have agreed and sort of have come into a consensus on a next round of stimulus checks. As you remember from the CARES Act, that was $1,200 for many Americans who qualified in that income threshold. Now, both parties are in agreement on that as well. Now, here's a new thing that was really interesting that came out today. We remember that House Speaker Nancy Pelosi has said that she definitely wanted a comprehensive plan and not a piecemeal plan. However, this was sort of different that came out today. She said, however, we might consider a standalone bill for the airline industry, because as you remember, with American Airlines and United, they're looking at over 30,000 Americans being furloughed because we're just not traveling, as always. So a lot of things are happening. I want to say a quick hello and thank you so much and this is an article that was that we were talking about today. Say a quick hello to Lena, Robin. So many of you are joining us. Get it here. It's wonderful always to see all of you. And thank you so much for tuning in. Today, as you know, is AWA, which stands for Ask Winnie Anything. And you definitely came in with force this week. So I want to say a huge thank you to all of you for submitting questions. Wow, we got some great questions in it. But what we really want to do is stay really, really relevant. I'm actually taking some questions from the last few days and definitely a lot of questions from last night and this morning to share with you today. But before I do that, I actually want to introduce a good friend to you. This is Stevekirashima CPA. Steve actually joins us from Los Angeles, downtown Los Angeles, in fact. He is a longtime corporate accountant, certified public accountant, works with many, many people here in California, and someone that I consider a dear friend, a friend of mine for over 20 years, and certainly definitely one of the best business advisors I've had for a very long time. Steve, welcome to the show. Thanks so much for joining us.
Thank you, Winnie.
Well, how you doing, Steve? How's downtown today?
Well, it's hot, and just like it has been for the past few months, not a whole lot of people walking around.
Not a lot how people will, it's interesting because downtown LA used to be, or, it wasn't even that long ago, but just, 6 or 7, 8 months ago, it was so hard to even make a turn because there's so many people, it's so congested, people in the streets. It was very similar to when you see images of Times Square in New York. You have a lot of people getting to meetings. In fact, I know the restaurant that you're across from is a really popular one, right? If you could talk about that a little bit. I mean, I think a lot of business people have gone to. It's considered and ranked one of the top restaurants in the country. And how does that look right now?
Yeah, the restaurant is called Bottega Louie, and you and I have eaten there before, but it from the very beginning, that restaurant got shuttered, and it stayed shuttered. They've got boards right in front of the windows, so you can't even look in. No one's going in and out, and unfortunately, that's a sign of a lot of the restaurants in this area. They're all closing up. The ones that were geared toward takeout to begin with, those are the ones that are doing okay now. But the restaurants that were sit down, dine in type restaurants, they're all suffering.
Yeah, it's unfortunate. And I know that some of your clients are in the hospitality space. And how are they doing, Steve?
Not good.
Mm.
And it's sad because the initial paycheck protection plan that came out was designed to have employers cover their employees' paychecks for a certain period of time. Unfortunately, especially in the hospitality industry, they don't have employees. They're essentially shut down, so they're not paying out any of the funds that they would have received. Fortunately, that got extended until the end of the year for them to be able to use the money, but it's still a tough situation.
It is a tough situation. Well, Steve, we are here to help. So we've got some questions that have come in. And so let's talk about, before we get to the questions, let's talk about the stimulus just for a little bit, Steve. The news is that obviously Treasury Secretary Steven Mnuchin and House Speaker Nancy Pelosi are dedicated and I guess are very committed to coming up with some sort of plan by this weekend, they're saying. I think before President Trump tested positive for the coronavirus, we felt that another round of stimulus funding, the chances of it coming about wasn't that strong. But I think I've been reading across the board, different financial analysts are saying, I think we're closer. We're closer to a plan because of this, because Americans continue to suffer from the coronavirus. And perhaps maybe, both parties are sensing even more urgency to getting this done. I know it's hard to predict, Steve, but what is your feeling about this? How do you feel? Do you feel like we're close to a deal?
I think we're getting close.
Mm-hmm.
The House passed its version of the stimulus package. There's not much hope that it's going to go any further, but I think Nancy Pelosi and Mnuchin are serious about trying to get something done. I think the reason why it's getting done is because there's pressure from places that we don't typically hear from. The Federal Reserve and Chairman Powell has been propping up the economy by printing money in large quantities. And so he's turned around and said, if a stimulus package is not forthcoming, we're not going to continue pumping out money to keep the economy propped up. So I think that's put pressure on a lot of analysts, and it's also put pressure on Pelosi and Mnuchin to get something done.
Yes.
So that's in addition to all the other pressure that that they've been getting.
Yes, absolutely. Many of you are following us on social media, and you've probably been watching social media all morning, as well as news came out that President Trump and several officials that were part of, I guess what we're hearing is a super spreading event may have happened when they actually were recommending the new Supreme Court justice during that event. So we're hearing more that that's where it may have come from. And certainly, I think people are continue to be very concerned about the coronavirus. And this is putting a lot of pressure because we do know that members of the House and Senate will be leaving shortly. And so there's a lot of concern of whether the stimulus package will come, the support will come for Americans before the election. Even today, we're seeing more news saying that we know we need to get a deal done, and perhaps members of the Republican and Democratic Party feel more, emotionally attached, right? Sometimes it needs a triggering event to happen, and perhaps the president contracting COVID maybe is the reason why this is happening. We don't know, but we'll see. Steve, why don't if you could do us a favor, maybe let's go ahead and throw up one of the questions that we've received this week, and if you could do me a favor and read the question to us.
Sure. The first question or comment: Yikes! The president tested positive. How do you think the market will react? Should I be moving more to cash? Do you think it's going to crash?
So this is a big question. I think a lot of people were wondering the same thing. It's interesting because yesterday night, I remember reading the news, and obviously I was on Twitter, and I saw the announcement from the president and talking about that he had contracted COVID, and literally the CNBC was reporting the market futures, and the market futures dropped immediately down 200, then 300, and then 500. So certainly we expected that the market to have volatility. Today, the Dow closed down 100, NASDAQ closed down 251 points. That is definitely volatility because, as you remember, this is significant drops. We actually saw, interesting enough, not everything went down because volatility doesn't necessarily mean bad. Volatility in both airline, in the area of airlines actually went up, because Pelosi had said that she wanted to make sure that there was a relief. She also made the announcement that that airlines should put a pause on furloughs right now until something's done. So we're hopeful that there will be funding in that area sooner rather than later. But to answer your question, I think it's a really good question, something that we're going to watch very, very closely in the coming days. Certainly, I think if we see President Trump getting better sooner rather than later, and things getting back to normal, meaning that the debates will continue, more campaigning, I certainly can see that being positively looked at by the financial markets, because as you know, the financial markets don't react well to uncertainty. So we are sort of in that limbo right now. We've seen a lot of physicians come out and scientists talk about that right now. President Trump is still in that early phase, but the next sort of 8 to 10 days will be very telling, because there's obviously we know that President Trump may have some precursors to additional risks health-wise. And so those are things that we're sort of being mindful of. But however, that being said, it could also be, if anything could really trigger the financial markets, what we're really looking for now is some direction on the stimulus package. If the stimulus package does in fact have some positive news this weekend or soon after, the market could rally very positively on that news as well. So I would say, if you're concerned about your investments and your money right now, don't hesitate to reach out. We can set up a complimentary 30-minute consult, which we should do, or reach out to a financial advisor or another professional or a CPA, someone to talk and talk through your finances right now. But I know, Steve, right now, this is sort of your busiest time of the year, right? Or one of the several busy times of the year for you.
It is. It's our last extension due date period, which is October 15th. So we've got 13 more days.
Yeah, 13 more days. Well, thank you so much for making the time for us, Steve. I really appreciate this. One thing that we definitely want to talk about, and why I had brought you on originally, was because the news that came out about President Trump's tax return, right? $750 paid federal for 2016 and 2017, and really sort of understanding some of the reasons why that took place. Do you want to touch upon that? Obviously, we don't want to go too heavy. President Trump is sick right now. Maybe something for another day. But what are some reasons why his return was so low? Do you know?
Well, I can't talk to specifics because I'm hearing it third hand also because, you're only reading about what the New York Times has reported. But we know for a fact that if you're in the real estate industry, you've got certain perks that you're able to take advantage of. And one of them, and anybody that owns a rental property or an investment property in real estate knows that one of the big things that you get is depreciation of the rental property. So even if you're from a cash flow standpoint, even if your rental income covers all the expenses that you have to disperse, on paper, what that'll show is a loss because you're depreciating the property itself. So if you paid, let's say, 100,000 for a piece of property, you get to depreciate that over time, the entire 100,000. So every year, even if you're break even on a cash standpoint, you're going to have on paper a loss. And I think that's a big impact of what's going on with Trump.
Okay, I love that. That's helpful. That gives us a lot of insight because certainly President Trump, I'm sure, has a lot of rental property and property in general. Obviously, that's sort of what the Trump companies are known for. All right, Steve, what do you think? Let's bring up another question. Shall we do that?
Sure. With President Trump testing positive for COVID-19, how do you think this will impact the next stimulus package?
Well, I mean, that's a great question, Steve, and certainly something that we touched on earlier, right? I think that's all eyes are on this. I think the good news that we're seeing is we definitely see more interest in getting a package done. And if you had asked, even like when I was on Digital Trends earlier this week, I said, I felt like we were close to a package and we sort of were far from a package. And even on Tuesday, we were over $1 trillion in difference from what the Republicans and the Democrats wanted on this package. But it looks like they have some things that they actually agree on. In fact, House Speaker Nancy Pelosi told us today that there was only 5 key things that still needed to be fleshed out. So we're hopeful that will happen, and we'll get some notification. I actually think, if you had asked me earlier this week, I would say that the chance of another round of stimulus funding check was probably closer to 40%. Now I'm thinking we're closer to like the 55% range. It's really hard to say with politicians, right? Because we do know that aid needs to occur. I'm hoping because Nancy Pelosi said that there could be a standalone bill for the airlines, perhaps they will be able to at least piecemeal some of it if it can't be an all comprehensive package. But we'll see. We'll see. And I'll keep updating you on this too. Certainly on Monday, we'll talk more about this. I'll let you know where we're at on that too. So great question. And thanks so much for submitting it. Let's see another question, Steve.
Okay. Today in the news, they said that House Speaker Nancy Pelosi said for airlines to put a pause on furloughs and that aid was coming. What do you think? My wife works for an airline, so we are concerned.
So thank you so much for submitting that question. And I know a lot of our friends in the travel industry and as well as in hospitality and in restaurant industry and whatnot are suffering right now, worrying about what's going to happen if there isn't support. Now, I will say this, the fact that Nancy Pelosi said that there could be a standalone bill for the airline industry certainly gives us a lot of hope. That being said, it could be a temporary Band-Aid. So what I would recommend, especially since you and your wife are concerned, I would certainly reach out. Let's go through your 401k. Let's take a look at what you have in company stock. Let's look at your benefits and put together a plan so that just in case things don't turn out the way that you want, or, she experiences job loss in a different way that have nothing to do with the stimulus package, that you're prepared. And that's what I would recommend all of you who are watching right now. Even if you're not in the airline industry, but you're just concerned and you want to make sure you are well prepared for any financial downturns or changes. I mean, the stock market could change. A lot of things could change, especially given that President Trump just tested positive for coronavirus. As you can see, life is quite fragile. So it's good to prepare things ahead of time. So if you want, I would actually suggest another thing too. Number one, you could definitely set up a meeting. Number two, on LinkedIn Learning, if you haven't checked out already, I have a course out called Managing Your Finances During a Financial Downturn. We've been getting so much incredible feedback on the course. I've been very grateful. People are saying it's so helpful to be able to prepare during this time and in the future. So if you want to sort of do something and get active this weekend, you can actually jump on LinkedIn and go through that course. I mean, that's why we put it together. So that way you could learn some of the things that actually we help Steve and I work with clients all the time. There's a lot of things and experiences that we've learned along the way that I've shared with you. So, if you want to, you can actually get started there. But please don't be shy. If you work for an airline, send me a direct message. We'll set up a call. It could be Zoom or regular, and let's just walk through some scenarios and sort of ease some of your concerns right now, sooner rather than later. Sound good? All right, let's go with another question.
Okay, the next question. Winnie, help. I hear that all the time. What personal finance system do you recommend? I need to track monthly, quarterly, and annual costs for my husband and I in our 2 homes. He does everything on paper and things get lost. So I want to create a digital version to mirror his paper version. Help I need to not make him feel bad and let him pay the bills, but keep track of it all.
Oh, this is, Steve, I'm sure you've heard this many times in your career too. Whenever you're dealing with money and couples or even individuals, like so much of it is how you feel about your finances and what makes most sense for you. But oftentimes, as in a couple situation or even in a business situation, you might not see eye to eye. And this is a tough one. So if I'm hearing you right from this question, your husband prefers sort of the more traditional paper route and you want to get him in a digital route. And I would say one of the things I would recommend is sometimes you just have to accept and respect that you look at things differently. But what makes sense most for you and what do you have in common so we can pull you to that area? So for example, one thing that I often like my clients to get to is to have a goal that they both are on the same page on, they're both excited about, right? So if you're here and you want to get here, one person might be like, I don't want to change. I'm happy with paper and pen. And the other person says, we really got to get digital because things are falling through the cracks. And it sounds like that's what's happening. Things are falling through the cracks. So I would say this, one thing that you can do is think of a positive experience. If we do this way, does this work for you? Are you comfortable with this? And if not, if we do it my way, this could translate into a list of positives, right? We could get things paid off on time. Maybe we can actually utilize that credit card, that travel rewards credit card and get points by paying it this way. Or, what if it might be good because we want to have a discussion with our children or an accountant, and it'd probably be easier to talk to them if they saw everything in digital format. Steve, what's your experience on this? I'm sure you've dealt with this quite a bit. How do you feel about this?
In a couple situation, when you have 2 people and one of them is the primary person that takes care of all the money matters, the interesting thing is if you make it paper, it's hard to relay that information, whether it's to your advisor or whether it's to your accountant. It's harder. But if you do it in a digital format, then not only can your spouse see the information, but your financial advisor and your accountant prefers to see it in digital format. It's easier to look at. It's easier to find out, okay, what are the results? Okay, what things do we have to question? And what are you missing? Things are so much easier in digital format, and you can fix it easier than a traditional paper thing. So I think that's one of the things from my perspective. It makes more sense to do it in an updated, more tech fashion than paper and pencil.
Great. And so we'll give you some examples of ways that you could do this. So some of the softwares that I think Intuit actually has some great software. So certainly if you have businesses, you have rental property, QuickBooks might be a good tool for you. I certainly love using it because my accountant firm prefers it, so it makes it really easy to communicate with. But also they also have Mint if you want something really simple. If you got to go really, really simple, you can even utilize like your credit card apps if you're paying for most of bills on credit card, or a lot of the banking companies now have great tools. Online banking is great. If your husband isn't comfortable with online banking, then just find ways, maybe even a spreadsheet, maybe small steps to get him there, and make there be we always say there needs to be a reason to change. Find a reason, find a motivator, and good luck to you. And of course, keep in touch and let us know how else we can help. All right, next question. Let's look at that.
Winnie, how people can still stay focused on long-term goals amid all the current uncertainty. Any tips? What do you say to people who ask you?
Long-term goals. Okay, that's a great question. In fact, I actually spoke to a good friend of mine, reporter at CNBC, on this exact topic. So great timing. We actually, the article I think is coming out very soon, so I'll definitely share that with all of you. But that being said, how can you focus on long-term goals? So many times, especially during the pandemic, we're literally just focused on today, tomorrow, maybe the weekend, right? Literally like groceries, and we've been sort of trained during this time to focus on 2-week periods, because when the start of the pandemic, everybody said, prepare your groceries and your goods, your dry goods for 2 weeks. So what happens is you're literally looking at, I don't know when the vaccine will be here, I don't know this, everything's become some short term. But what you need to realize is we will be behind the pandemic. You know this, but sometimes you forget. And those long-term financial goals aren't going away. So for example, your child, if you have a child that's younger, will still probably need to go to college at some time. You're probably going to need to retire at some point. You might have other dependents that depend on you. So financially, those financial goals are still really important. Plus, you can still focus on some positive financial goals. So what I really like you doing right now is over the weekend, think of a really positive financial goal for yourself. Like, for example, for my family and I, our long-term happy financial goal, of course, is more vacation planning. So we want to beef up our vacation fund for sure. We also want to, consider if the kids get older, what are other trips that we like to take? Maybe even look at additional real estate, whatever that may be. Think of a happy financial goal and put it out there amongst your other financial goals, because you want to continue to focus on long term and take a look at where the financial markets are today and for the next few weeks, certainly. And perhaps if there continue to be pullbacks in the financial markets or corrections, and you have those long-term financial goals and you have like your risk assessment all planned out, you have your investments planned out, it might actually give you some buying opportunities. In fact, I see Nick actually asked a question about investing in gold. It's so interesting, Nick. I want to touch upon this really quickly because I actually have gotten a lot of questions about gold with my own clients. And, typically gold and most commodities are seen as a bearish sign of the financial markets. So given that the financial markets up until September and up until recently, we're doing quite well. In fact, in August, all of the reduction in the financial markets from the pandemic announcement was recovered by August. And in September, it's been pretty rocky, but up until a couple of days ago, it actually was starting to look and get closer to positive levels as we go here into the election. So I will tell you this, as it pertains to commodities and gold and things like this, it's important to have a percentage of this in your overall portfolio for many clients. However, in terms of how much, typically I wouldn't go overboard. It's not something you want to go all in. But if you're planned well for your long-term financial goal and you have plenty of years before you're going to need those monies, and you're working, you've taken the time to really build a proper portfolio and it's nicely diversified, and you've maybe worked with a financial advisor and put together a financial plan, then, continue to stay consistent. Continue to stay with your portfolio that makes sense for you. However, if you're let's say you're about to retire in the next 6 to 12 months, right? Or you just got laid off or something drastically changed, then at that point, you should take pause and re-examine and reposition where you stand financially to make sure that it makes sense for you. And so I highly recommend reaching out to a professional right now to do that. And also the other thing I will say, because Steve is here, I would love to have this real last question too. I know that's our last question that we submitted today, but one question that I think a lot of people have been asking is, what other things should I be thinking about before year end? And I'll say one thing you should definitely do is certainly after the next 2 weeks, reach out, make an appointment, a phone call or a Zoom call with your accountant and do some end of the year planning. Talk to your financial advisor if you're looking to do gifting, set up a retirement plan before the end of the year. But Steve, let's talk about sort of the elephant in the room, and that is taxes. Do you think taxes are going higher in the future, Steve?
Winnie, this is something that I was going to throw out anyway at some point. Not to be a doom and gloom kind of person, but with all this discussion about, well, is the market going to crash, and are we going to be okay because a stimulus package is going to come around? In any of those situations, what's going to happen is that the federal government is going to find itself in a multi-trillion-dollar deficit. And for our federal government to make up that deficit, what it has to do is it has to raise taxes. The current tax rates that we're at right now is not going to make up for what the federal government is putting out in terms of funds. So not that it may happen in the short term, but irrespective of who gets voted in as president come November, you're going to see a tax rate hike. So in your long-term planning, I think that needs to be taken into account. People need to realize that a lot of their qualified monies that are in plans, retirement plans, are going to come out and it's going to be taxable. And what that means is that you're going to be paying taxes on it, and you may find yourself paying more taxes down the road on retirement than you are now. So when you talk to Winnie or your financial advisor or your accountant, keep that in mind and have that as one of the discussion points that you need to take with you.
Yes, thank you, Steve. You almost like teed it up perfectly for me, because I actually shared an article on Forbes. I wrote an article for Forbes recently on just this thing. I think I want to put on everybody's radar. If you haven't seen it yet, please do me a favor and read it. And that is 2020 is a year you should consider the Roth IRA conversion. It may be good for you. It may be appropriate for you. It may not be. Regardless of it, I just want to make sure that it's on your radar, because as Steve had mentioned earlier, your future retirement assets could be taxed at higher levels than we are currently being taxed at now. So if you are able to, and you don't want to do a Roth IRA conversion without a professional's help, but this is something that you should chat with your accountant about. You should certainly chat it with your financial advisor. It's something we are proactively talking to our clients about. So I want to make sure that you have this in mind as well. So Nick, thank you so much for your kind comment. This is why we do what we do. This is why we come here, because I'm hoping during this pandemic, this is something that we can share, bring experts like you, like Stevekirashima here, literally one of the best human beings for sure, but also like so knowledgeable in all things taxation, a great person. So if you're anywhere in the United States, in fact, I mean, in most states, I think, especially if you're here in California, you definitely want to work with an expert. And if you're in California, I think even in Nevada, right, Steve, definitely reach out to Steve. You can he's actually not that active on social media and whatnot, but you can definitely give his office a call. And in fact, should we just share the number? Should we share the number on the air? How do you feel about that, Steve?
Yeah, that's fine. Our telephone number is 213-629-0255.
Yeah, so and there's Steve's website, so you can actually go there. He even has an email there, and reach out to him, set up a call. Probably won't be available for the next 15 days, but I imagine after that, he'd be a great person, especially those of you who are building businesses and looking to take it to that next level, or your businesses are already very successful, but you just need an accountant that understands you and can talk to you and can really give you good advice, like usable advice. Steve is definitely that type of an accountant, and certainly a great person to know. So Steve, we have something fun that we like to do, and that's called Speed Round. And since you're here, I'm going to ask you. All right, Steve, you ready for speed round?
I guess. I don't know what it is.
All right, first question, Steve. What's your favorite sport?
Basketball.
Okay. Next question. Fill in the blank. If I could only meet blank person, I would love to meet this person at this place. What would be your answer? Anybody.
I think once in my lifetime, I'd like to shake hands with Barack Obama.
And where would you like to meet?
In Hawaii.
In Hawaii. I love it because President Obama actually went to school in Hawaii, right?
Yep, exactly.
And did you go to school in Hawaii as well?
For part of my life, I did. When I was in elementary school.
Okay. Last question, Steve. If I won the lotto, I would blank.
You would talk to me about what to do with the money.
No. This is your question to you, Steve.
Oh, if I got it?
If you won the lotto, you would?
I would pay off my kids' college education bills and student loans.
Good answer. Great answer. Well, thank you so much, Steve. You have survived the speed round. We appreciate you so much. And of course, we appreciate all of you who have tuned in. Look at, actually, you know what? You have a fan here. Let's share that. Mr. Justin Simon. Look at Steve. That's my dude. That must be you and your clients, huh?
He's one of my favorite clients.
Aw, did you hear that, Justin Simon? He said you're one of his favorite clients. I gotta tell you, Justin Simon is one of my favorite human beings. He's just a great person. In fact, actually, since we have Justin Simon here, let's just put it out in the universe. Let me tell you, Justin Simon is a digital marketing powerhouse. So if you are a company looking to create a creative agency or creative arm or develop a team out to do digital strategy, marketing, things like that, Justin Simon is a great person to reach out to. So I know we're embarrassing you, Justin, but let me tell you, reach out to Justin Simon, find him, tell him, say, Winnie told me to call you because I want to take my business to the next level. That's the guy you call. What do you think, Steve?
Justin
Would you agree with that? He's the man. So a great person, a trusted friend, someone that I've really enjoyed getting to know through the years. So hopefully you get a chance to meet him. But most importantly, thank you all so much for tuning in. We hope that you stay safe and you have a beautiful weekend with the people that you love. Remember that we are grateful for you. I'm so grateful for you. And I hope that you have enjoyed this, this talk that we have and this time together. And thank you so much for tuning in, because without you, I wouldn't know what to talk about, and I wouldn't know what to do. So thank you so much for bringing so much value to my life. See you on social, and most importantly, see you back on Monday when we come live again. Take care now.